What's up, you guys? All right, well, here we are. It's Red Day Recap. You guys will probably enjoy this more than I do. I think Red Day recaps often are some of the better recaps. I'm talking about some of the very real struggles and challenges of being a day trader. Even after doing this for as long as I've been doing it, red days, breaking rules, frustration, all of that still happens. So today I started the day with a series of red trades on Sava, I missed sort of this bigger pre-market move, and as it was starting to pull back, I was trying to buy it to anticipate the first 1 minute and then the first 5 minute candles to make a new high. And each time that started to happen, as I was sort of buying, it was like very, very shortly after we got a big flush, and I stopped out once, twice, 3 times, 4 times. I think I might have had 5 or even 6 red trades in a row on Sava. And what I did, which is kind of something you have to be really careful about, is I kept taking bigger share size on each trade. And I did that, as many traders will, because on the one hand, as it came further down, I kept thinking that now when it does bounce, it's gonna bounce even bigger. And I think instinctively I wanted to try to recoup the earlier losses. And so what ended up happening was, loss 2 was bigger than 1, 3 was bigger than 2, 4 was bigger than 3, 5 was bigger than 4, 6 was bigger than 5. Basically, I think there was 1 in between that was a break-even trade, but generally the losses were getting bigger and bigger and bigger and bigger. So I went from down, I think red 1,300, then 7,000, then 12,000, then 15, and then to 31,000. Just over 30,000. I'm red 28 on the day. I did take a couple other trades that recouped a little bit, but not in a meaningful way, but whatever. So yeah, I'm down 28,000 on the day. Most of it on one stock that I just kept trading, and I did draw the line in the sand at a certain point on it, but it was not as good of a place as if I had drawn it much, much earlier. So during the recap, I'll talk about why I made some of those decisions, not to say that they were all the best decisions, because I have, of course, a sort of a strategy and a set of rules that I follow generally. But, like anyone else, there are times where, for whatever reason, I decide to go outside those rules. And I say, you know what, okay, I've had 3 losses in a row, but I really think it's gonna bounce. So I take a trade, and then 4th loss. All right, okay. So 4 in a row, but really I think this is gonna go. And at the end of the day, the only person that's gonna hold you accountable for following your rules is yourself. And in the market, sometimes you will take that 4th trade after having 3 red trades and have a huge, green trade. And so the market in that way is rewarding you for essentially breaking your rules. And that can send mixed messages. When is it okay to break rules? At what point are these rules helping me? At what point do I follow that rule and say I'm not taking that 4th trade, and then watch it do exactly what I thought it would do and make a huge bounce? And I'm like, man, these rules are hurting me. I'm being punished now for following my rules. And so that can all create this sort of internal conflict about when do I strictly follow them? How do I handle the frustration of kind of feeling punished for following the rules? And then how do I handle situations where I continue to start breaking the rules, and then, it doesn't work and I'm just losing more and more, and then also on top of the loss have that self-frustration of, I knew I shouldn't have done it, or I really shouldn't have done it based on the rules, but then I did it anyways. And so all of that is something that we all struggle with in probably one way or another. So today, for sure, was a discouraging day. This will be my, within the top 3 biggest red days I've ever had in my career. The other 3 the other 2, these 3 total are all right around the $28,000, $30,000 level. The fact is, having big losses that are far bigger than your daily goal, or maybe even in some cases bigger than your weekly or monthly goal, is not uncommon. Day trading is risky. Losses can happen quickly, And if you don't have self-control, they can also start to snowball where you start to double down or losses get bigger and bigger and bigger. But what I will say is that everyone has a sort of max pain point somewhere. And that's usually what we would sort of call the capitulation, where you just throw in the towel. You're like, oh my God, this is brutal. And that's when you're doing it when you're selling. It's when you're seeing a stock just totally rolling over. It's just dropping. And we actually didn't see a lot of that on Sava. We saw more of just like a grinding, stair-stepping lower, which is kind of interesting. But then on the other side, the capitulation, when a stock starts squeezing up, like where short sellers are like, oh my God, this thing's just going crazy, and they just press the market order button and then just get out. I would say that my line is always the bailout is on the earlier side, because what I don't find myself doing is holding the bag on stocks. Like when I log in tomorrow, although I will have lost money, from today, I'll start with 0 positions. I'm not holding anything into tomorrow. So, I just draw the line in the sand, but it's usually within the range of, the intraday price action, not to the point where I'm holding it overnight and hoping it turns around, which is good because if you look at some of these stocks, when they start to fail intraday, it can become a multi-day pattern of just selling off. And so that can make losses a lot worse. All right, so yeah, I've shut down my charts. I still have my scanners up, but I'm gonna close those down. The best thing that I can do is just walk away and not look at stocks for the rest of the day today, because there's no way I can look at them without feeling somewhat emotionally charged. And even tomorrow, as much as I might say, I'm fine, I'm totally okay, I've had a great year, $30,000 doesn't even shake me. I think that it's impossible for that to be true. A big red day like today is gonna knock me off my balance, off my center a little bit for a couple of days, maybe for the rest of the week. And so the biggest risk that I have would be tomorrow underestimating that, thinking I'm fine, and trading with big size and having a second big red day and being down 15, 20, 30,000 2 days in a row. That would be the worst case scenario. And so to mitigate the risk of that happening and this turning into a multi-day, kind of downward spiral, what I'm gonna need to do tomorrow is trade with smaller share size. That way, if it is a red day, maybe because the market is choppy and we don't have any good setups, well, at least with small share size, I'm not, digging the hole a lot deeper. I'm down 30, 28, whatever. If I lose 2,000 tomorrow, that's not gonna make a huge difference, right? That's okay. It's losing 10, 15, 20, 30, that's where it's gonna start to hurt. So that's within my control to set max share size lower. So tomorrow, even if we see great opportunities, first just build my cushion with small share size. If I get my cushion built and then can scale up a little bit, maybe I would, but not in the first couple trades. So tomorrow is an important day. Anytime you have a red day, the next day is important, and you can't underestimate how much the emotional disappointment and frustration from the previous day can and will tend to carry over. So you have to just try to start clearing the slate and putting some distance between you and that big loss. It kind of takes time to mourn and grieve the loss and the loss of money and just hit to your pride or whatever it is that this happened. And so you just gotta start putting days between you and that big red day. And as I was getting started trading in my early career, it felt like the focus oftentimes was continuing to just put as many days in between big red days as possible. And at one point they were happening sometimes multiple times a week, and then it started to happen maybe once a week, so every 7 days, and then started to separate them out to every 2 weeks, every 3 weeks, once a month, every 4 to 6 weeks, every 8 weeks, every 3 to 4 months, every 6 months, right? And so the more you can separate out those big red days, the more profit you can make in the middle. But there's no day trader out there that I've ever met, or that probably ever will exist, that doesn't every certain period of time have a red day that just got away from them. It's the way it goes. So being successful, it's not about not having red days. It's not about not having losses. Certainly there's things that we can do to try to mitigate them, but eventually, at some point, through bad luck or your own mistakes, it'll happen. And so long-term success is having the ability to put those losses aside, to get back up on the horse. And that's it takes time to get good at that. And it's not without practice. So the best traders often are also the best losers because they've lost so many times they've been able to brush it off quickly and kind of get right back up on the horse. So that's going to be my goal for the rest of the week, to try to brush off this loss with a couple of small green days, Tuesday, Wednesday, Thursday, and just to kind of start to even out, shake things off and try to get back into the groove. And hopefully the market will be there on my side to provide some wind at the back. But it's very possible that I'll continue to be feeling like I'm going into a headwind tomorrow, Wednesday, Thursday, for all I know. And whether I was trading with small size or big size, if it continues to be a choppy market, it's going to be hard to make a lot of headway. So I'll show up every day, hoping to see some nice opportunities, but prepared to have to be sitting on the sidelines and much more conservative while I sort of try to just recoup and get grounded and recenter. All right, so we'll get into the full recap here. I hope you guys enjoy it. I appreciate the thumbs up. One thumb up for every dollar I lost will make me feel a lot better. So hit that thumbs up, and I will see you guys first thing tomorrow morning. I'll be live streaming my watch list right around 8:45 or 9 a.m., something like that. And hopefully we see a nice gap scanner to wake up to tomorrow morning. All right, see you guys in the morning. All right, so we're going to do red day recap here. I think I was red last Tuesday. Monday, we had the day off for Labor Day. So same as last week, starting in the red, which is, it's not a fun way to start the week because you're starting the week, initially, in the red, in the hole. Now I've got to spend the rest of the week digging myself out. So I've got $3,000 of profit here on Tesla VXRT, and that only helps offset the loss on my retirement account, $30,000 on Sava, which was, I think, 6 independent trades where I didn't have one winner on Sava. I didn't have a single winning trade. It was 6 losers in a row, which definitely breaks my rule about stopping after 3 losses. And it speaks to frustration setting in and saying, well, I'm not going to stop because I'm frustrated. I'm going to keep going for it. And it shows you how even after, years of experience, it's not impossible to fall into that rut of frustration and not wanting to give up. And then, a loser starts to turn around or get bigger and bigger. So my first trade on Sava was right here. So I bought the first 1-minute candle to make a new high, and I actually started on it with 10,000 shares and then went up to 20,000. So I had 20,000 shares of this for the first candle to make a new high at an average of 69 or 70. And so you can see right here how it made a new high by 3 cents and then dropped 40 cents. So I was down $8,000 after that first trade. It sold off a little bit more, as you can see, and I tried to do a bounce down here off of 8. It popped up to a high of 835, went sideways, flushed lower. After that trade, I was down 12,000. The next trade on it, let's see. I waited for a little bit more of a sell-off, and let's see, where was it? Where was that one? All right, it was around, so it was down here a little further. So the next trade, I tried to do a bounce off of, where was this? It was this one right here. So I got in here looking for, we were close to the volume weight average price, but we hadn't bounced off of it yet. So I tried to start accumulating a position, thinking that if it broke over 85 right here, we were going to be lining up for the first 5-minute candle to make a new high. The high of the last that last 5-minute candle was 825. And so I was kind of trying to buy that dip right here, thinking that I would add over 8, break of 810, 815, 825, and then a squeeze up to 850, and that would be a nice trade. So I did a 10,000 share starter on it and doubled to 20,000 shares on this one. And again, it flushed down. I stopped out of that and was down 15,000. I believe at that point it was either 13 or 15,000 on the day. So I was like, all right, this is not good. And I didn't take any more trades until the bell rang. The bell rings, and, although, well, number one, I'd already had 3 losses in a row. And I was already in the red. But, I chose to keep trading, and that was based on me feeling like, I think I felt frustrated. I was like, all right, well, I've lost more than I was planning on pre-market. But the market hasn't even opened yet, and there's certainly going to be more opportunities once the bell rings. So let's see what happens, and maybe I can start to, cut the loss back or minimize the damage a little bit. So the bell rings, and other stocks that I could have been watching. See, the thing is, this morning Sava was the leading gapper. And then next one was IMMU, which was trading sideways at 84. Jill is too cheap. SGMS, there were some opportunities on it, but the float was a little higher and the price is higher. VXRT, 108 million share float. You can see I did trade that one over in this account for $900, but I wasn't totally sure about it. So Sava was the one that I thought would have the most volume and be the most predictable and the easiest to trade. 74 million shares of volume. A lot of volume, definitely volatile. In fact, not easy to trade. So when the bell rang, my E-signal charts went down again, which was really annoying. So charts went down. I had no charts, but I was watching the level 2, and I had seen that the high here was about 735. It then flushed down to 689. It then curled back up, and as it started to curl back up, I bought right here for the break of 735, or right around there, and it rips up to 750. I added at 750, 30,000 shares. So I'm going for this kind of big trade through 750 and a squeeze up to 8. I saw that the halt level was 779, and I thought this one might have the potential, if it rips through 750, to hit 779 halt, going up, and then gap higher up back towards 8. First 5-minute candle to make a new high, everything kind of lining up. And so 753 was the big breakout spot. That would have been the first 5-minute candle to make a new high. And then, as you can see, it flushed really hard. And with 30,000 shares, I stopped out for a $15,000 loss. And so that was the biggest loss. And just like that, I went from down 15 to down 30. So this, and that was right there. So this will be probably the biggest negative, like on one stock trade that I've ever had. I've had a couple of bigger losses, but this is basically tied at a $27,000 red day or $28,000 red day with my other top 2 biggest red days of all time. My biggest they're all right around the same spot at 28,000, 30,000. So one of them was early in my career. Another one was last year in March of 2019. And now I have this one here, right now. So this is definitely a big step backwards. It feels discouraging. It also feels somewhat self-inflicted because I broke my rules of consecutive red trades. I also broke my rules after being down 30,000 of continuing to trade. Although I was cautious, I only made back $3,000, and making back $3,000, while that's nice, that does constitute an additional rule break, right? Because I traded past the max loss. So yeah, instead of being down 31, I'm down 28, but I broke another rule. So, again, this speaks to one of the struggles that a lot of traders have, which is, you have one or two losses, which I had pre-market, first down 7 or whatever, then down 12, and all of a sudden you sort of go off the rails and you're frustrated, and you start doing, you either don't walk away because you don't want to walk away down 12 or 15. It's pre-market. There's still a lot of time to try to recoup some of the loss, and so you stick with it. Next thing you know, you're down 20, 25, 28, 30, whatever the case is. In this case, I doubled from down 15 to down 30 in one trade with big size. It was kind of a try to bail out myself trade with 30,000 shares. It wasn't a really... this setup wasn't a bad setup. It was first candle to make a new high. It was a red to green setup, a break of VWAP, and an anticipation of the first 5-minute candle to make a new high. That setup wasn't bad. What was bad was that the stock had already proven that it was not really very trustworthy with 2, 4, 5, 6 red candles. Of course, after 6 red candles, your likelihood of getting a green candle is increasing. But she ended up having 6, 7, 8, 9, call it 10, 11 red candles in a row. We didn't have a first candle make a new high until right here at 10:10. So you can't underestimate how weak a stock can be. And I'll be thankful that I at least, have cut the loss, because maybe as a earlier trader, an instinct might have been just to say, forget it, I'm not selling this, I'm just going to hold it. I'm refusing to sell and take this loss. I'm just going to hold it and hope it turns around. And that, obviously, if I had done that, would have resulted in a much, much bigger loss. So I feel like I'm kind of spinning my wheels a little bit with $35,000 on Thursday and Friday, which was great. And then now down 30 today, give or take. So it's like 2 steps forward, 2 steps back, 3 steps forward, 3 steps back. I'm having a hard time getting traction. And, I might as well have just had made 3,000 Thursday and Friday and then lost 3,000 today. It just happens that I'm trading with bigger size, so the numbers are bigger, whether it's green or, as the case is today, it's red. And so that is just the nature of trading with big size. I don't feel particularly, at this moment, I feel frustrated. I'm disappointed. But I'm also able to, I suppose, maintain this presence of mind that I am still green on the month, which is good. I've had a terrific year, which is great. And so all things considered, this is probably the equivalent of like a $3,000 red day, 4 years ago or 5 years ago or something like that. It's a setback. It's a little discouraging. But on the other hand, 2 or 3 good days and it'll be as if it never happened. It'll be kind of water under the bridge on the one hand. But on the other hand, it's always discouraging to have kind of a bigger drawdown. So, back to my TraderView stats. So we were talking about these on Friday, and let's see, I was showing you guys my drawdowns. So let me just pull this up here real quick. Okay, so, all right, so this is my drawdown. So I had a drawdown of 23,000 on the 13th, then back to green, then a drawdown of 20,000, then a drawdown of 16, a drawdown of 14, and a drawdown last week, I guess, of 12 or 13 or whatever it was. So today's drawdown, is going to be down at the 30 line, right? So that's actually going to be my second biggest drawdown of the year, and it happened in one day. That's not great. but it is what it is. So what happened here was a series of like a $16,000 day, another red day, another red day, another red day. So it was like 3 or 4 red days in a row, which was a really bad kind of streak. But then, that ended up opening up into, once I kind of cleared the slate, that ended up giving way to a really nice hot streak here, which has slowed down a little bit in the last 3 weeks as I've kind of plateaued just near the highs. But we're talking about $3 million. So $3.2 million, this is on the year. So again, to be down 30 grand in one day or 28,000, big picture is that's a blip in the P&L, but it's still discouraging. And it would be for anyone, probably regardless of how successful you might be. And I think what maybe is especially discouraging for me is that because of my strategy, I'm not sure that, like on the trade that I lost 15 grand, the potential on that, if it broke through 750, was a squeeze up to 775 and maybe a halt up around 779, or maybe a squeeze straight to 8. Now the win on that could have been $15,000. If it actually halted and gapped higher, it could have been a $20,000+ winner. So that one, the profit loss ratio is okay, but it's kind of uncommon for me to hit like a $30,000 winner in one single trade. And even a $15,000 winner in one single trade right now is getting a little hard to squeeze out, just because the momentum has been a little, I don't know, we just haven't had quite as much momentum in this last couple of weeks as we had back in June and July. So this isn't the best time to have a good size loss, because realistically, I don't think I'm going to make it back. I don't think I'll make it back this week. I mean, again, I did have 35,000 on Thursday and Friday. I was up 25,000 on Thursday, and then I was up 10,000 on Friday. So, you never know. I mean, I might hit a couple $5,000 green days, a $10,000 day, maybe a $15,000, $20,000 day. And maybe by the end of the week, I will be back out of the, this dip and back to the highs on the month. But I'm not going to really set that expectation, because I think it's, number one, not maybe the best way to look at things, but also not super realistic for this market. Because what we have here is a pretty epic failure on this stock. And in fact, again, you have what could have been some really nice opportunities earlier pre-market. And so this broke out really, really nicely right here at 8:30 a.m. Lighter volume, but, early. And went from 725 all the way up to 919. And then it just gave all of that back. So it increased in volume, and then steady volume on the pullback, high red volume, and just continued selling. So, tomorrow it's like, should I get up and sit down here to start trading at 8 a.m.? So if we have something like this, I can try to catch this first move and not be sitting down after we've already seen, because I didn't sit down until 8:30 or 8:45ish. So like I was sitting down like right here when it was topping out, and then trying to buy the first pullback. It just, not because it wouldn't have been a better trade to be in here, but just because I had missed it. It's not uncommon to miss a setup, even if you're sitting here watching. Sometimes you still miss stuff, and then you just buy the first pullback. But this pre-market trading has become a little bit more popular this year. And I think it's because when traders start to see opportunities, they haven't wanted to wait. And so all of a sudden, you're seeing stocks ripping up earlier and earlier pre-market. But then oftentimes the charts look like this, where they faded. VXRT was kind of similar in that, actually not, well, yeah, you had a pop here and then a pullback. It did come back up a little bit before the bell. KNDI, that one just had news but then sold off. Let's see. I think there was another one I was thinking of, but, Jill. JILL. So Jill, you had this pre-market move, but this was at like 5 in the morning. Start getting up early and early and earlier. Next thing you know, you're waking up at 4 in the morning to try to catch I don't know. I'm not sure I think that that's a direction I really want to go in. I think more often than not, most days we do have opportunities starting at 9:30, but it sets a little bit of precedent when the leading gapper fails as dramatically as this one did, because naturally anyone who traded it to the long side is going to be red. And I mean, not that you couldn't have been green on it, but it would have been kind of hard given this pullback. And so, it made me a little bit more cautious. When I started seeing other things popping up, I was like, I don't know. I'm not sure. I want to wait for extra confirmation, really be sure of it before I jump in. And so that hesitancy doesn't, that across the board, you're just going to see less follow through that whole day. So yeah, I think at this point, in terms of setting a game plan for tomorrow, probably the worst thing that could happen tomorrow would be that I sit down and lose another 15,000 or 20,000, right? Because then all of a sudden, and again, it's not to say that I couldn't afford it given the fact that I'm up 3.2 million on the year, and that's the problem. Because I have a lot of profit, I could say tomorrow, I'm just going to trade the exact same as usual, same as what I did today, but hope that the market is better, and maybe tomorrow I'll be up $10,000 or $15,000. But just as easily, I could potentially be down another 10 or 15,000. Or let's say I start to get frustrated and it starts to snowball and I'm down 15, 20, and I'm knowing in my head, man, now you're down 50,000. You're sitting on the biggest drawdown that you've ever had. And that starts to become more of an issue. So unfortunately, days like today, they are discouraging for a couple reasons. Number one, it's a big loss. But number two, because of this big loss, it's going to force me tomorrow to trade with smaller size, because I can't afford the risk of having another big drawdown day, because then my net drawdown in the hole is getting deeper. So even though tomorrow we might see an awesome opportunity, until I have a profit cushion with small size, I can't take 20,000 shares on my first trade. I probably shouldn't take 10,000. I should probably be taking 2,500 or maybe 4,000 at most, and try to make $800 or $1,200, and then slowly scale up if we're having a good day. And that may mean that I miss some opportunities tomorrow to potentially make some really good profit, because I'm having to be a little bit on the defensive side. I'm trying to think of a good analogy for it, but it's just one of those situations where if I had had a nice profit today, then tomorrow I could afford to take a little risk and try to roll some of that momentum forward to the next trade. But right now, I just have to try to start catching some momentum again. I just have to start kind of moving back in the right direction, and I'm not going to be able to afford to take a lot of risk, and that might mean that on a really great opportunity, I feel disappointed again tomorrow that I wasn't able to make as much as I could have had I had that profit cushion and been able to afford more risk, and so on and so forth. So that kind of can be a perpetuating state where after one big loss, you get conservative, and then which is the right thing to do. It's the right thing to be conservative, because if after one big loss you get more aggressive, then what's usually going to happen is then tomorrow I have a $60,000 loss, and then to make myself green after 90,000 red, the next day I go crazy aggressive and I'm down 100 grand, and then over the course of 3 days I've given back $250,000. Right? So that would be what would happen if I continue to be more and more and more aggressive and the market just wasn't on my side. If I go more conservative, then after a big red day, the next day I'm on the defense, I'm being a little bit more cautious, conservative, and I miss the opportunity to make a lot of money on what could have been a great trade because I'm trading with small size. I feel a little frustration. And then, day 3, I come in and I'm still trying to dig my way out of the hole. And, again, on day 1, I lost 30. Day 2, let's say I made back 4,000, so it's like I'm still down 26. Day 3, I still have to be on the defense. I might feel a little frustration from Monday and Tuesday. And so I continue to kind of be under capitalizing on opportunities, but knowing that it's the right thing to do. So maybe I make a couple thousand. And it's just that feeling of, had I had 3 days ago, I not made that one mistake, I'd be in such a different place now. So that one mistake can hurt you for days and days, even weeks into the future, as you are in the process of trying to slowly rebound without making the loss and the drawdown bigger and bigger. It puts you in a place where you're not able to be aggressive. And so comparatively to someone who made better decisions on, this one day, they're then positioned to be even more aggressive on day 2 and more aggressive on day 3 and more aggressive on day 4. And then that can all sort of, snowball positively into really big green weeks and big green months. And that's, I think, the times that it sometimes feels frustrating for a beginner trader that, man, it's the traders that are already making money that are just killing it day after day after day after day. And it's because they've got the momentum going for them so well that they can afford to take risk. They can have small drawdowns, but immediately bounce back from them. And it's the traders that are getting started, or, even a trader like myself who just has like a kind of bad day for a variety of reasons, that then has to be on this kind of trader rehab type of process of being really conservative and frustrated. You're seeing other people make money, you're not doing as well, and you're just kind of half sort of behind the ball on each trade, and it just feels like you're spinning your wheels while someone else in the same exact market is doing really well. And that's part of trading. And it's a frustrating component. And it's something that we all have to be able to go through and get through, because there's no other way around it. There's no trader out there that doesn't occasionally have a big drawdown. And another trader with my exact same P&L, but a different disposition about trading, might tomorrow go ahead and double down to 50, 60,000 shares. And maybe it works for them and they have a $100,000 green day. Or maybe it doesn't, and they're a trader that's going to be down 150,000 on the day, and they're going to have even bigger swings in the P&L and even bigger drawdowns. I just don't handle the drawdowns as well as maybe I'd like to. And so that puts me in a position where as soon as I start losing, I start getting upset with myself. I start getting frustrated. And I know that because those emotions can influence trading, that I have to step back on my share size. Otherwise, next thing I know, I'm going to be holding, 50,000 shares of something. It can just spiral really fast. So I don't know. I think that I sort of knew this was bound to happen, obviously. I mean, just based on statistics, I've had a really great hot streak for the last 5 or 6 months, and it was bound to happen that I'd have a few bigger red days here and there. And I was trying to tell myself in advance during the hot streak, listen, man, you're up 200,000 on the day, 225,000 on the day, 200 whatever. Remember these days 6 months from now when you're in a drawdown and you're in a slump, because you're the same trader. Remember, tell yourself, so today, Ross, you're the same trader that made $200,000 in one day earlier this year. You're the same trader that made whatever it is. And I'm sure every one of you could say that, because trading, even losing, is not in the absence of having green trades. So you're still the trader who made these profits, and still the trader who knows how to read level 2 and can trade really well. But you've got to, ride the trend and the waves of the market. And sometimes the market will be totally on your side and the wind is at your back, and sometimes you're going into a headwind and it feels like no matter how long you sit here, how many stocks you pull up on the scanner, you can't make any progress. And so today, at a certain point, I just said, you know what, I'm giving up. This is our entire momentum scanner today. So starting at 9:30, you can see nothing really hit multiple times in a row and was sustained. SGMS from 26 to 28 wasn't bad. CTMX hit for a second and was gone. MOXC hit for a second, was gone. Pop and fade, pop and fade. So I could just pull these up for you for a second just so you kind of see what they looked like. So going back to the beginning. So SAVA we already looked at. ZYME popped for a second. Would have been hard to predict based on this very light pre-market action, and almost definitely has had large spreads. So let's see, ZYME. I don't know. I wouldn't have traded that one most likely. CHNR. So this one popped up pre-market, sold off, popped at the bell and sold off. SGMS. This one actually was nice, but I didn't expect it, and there was really no way to jump on it after it had gone. CGIX hit the scanners here for one quick second, popped up, back down, no volume, no interest. MOXC popped up for a second, came back down. EQ, same story, popping up for a second. Light volume stocks. CTMX popped up on the scanner a few times, but none of these moves are really sustained. AHPI, a former momentum stock, popped up for a second, faded. SPAQ, again, a little bit of opportunity here, but compared to some of the charts that we were looking at, in recent weeks and months, all of this feels very subdued. It's like a quick pop, a pullback, and then 5-cent breakout. This is just not easy to work with. So what I maybe wish I had done today in hindsight, I guess I would say not have been so aggressive on my first trade, but I underestimated SAVA a little bit in terms of how much it would keep dropping. It looked right here, it looked really strong. And on this pullback, I was like, that's okay, we're still bullish. And then it just really rolled over. So that's going to happen. And yeah, Tesla, I did take a quick trade on this one, which was kind of risky, but it was in this area here, looking for the break over 400, which it didn't do at the time, but it does look like it's coming up to it now. The thing is, I haven't had a super good track record on trading Tesla. You can see as it comes back up here, I don't know if it's going to break through 400. I like that idea, but I think that it's probably going to be, there's probably going to be sellers right under this critical level. So look at that. Okay, so no, that's important. See, so it broke and then was back below. Look at the bid. The bid down here is 99.25. So initially, it needs to hold, the bid right here needs to hold above 400. So a lot of churn there. And of course, that's why Tesla's a very hard stock to day trade. There's a lot of churn, and it can be very frustrating. So there were a stack of sellers at 400. It ripped through it. It popped up to 482, I guess, for a split second, and then right back down. So $400.82 would be the spot you'd want to see break. But buying a breakout on this is impossible in the sense that you've got big spreads. It can drop $2 a share like that, and your risk is just often very high compared to your profit potential. So it really wasn't a great trade, the one that I took. It was a winner, but really wasn't worth it. It's not like I would have held it this whole pullback down to 91 to be able to get this breakout here. So anyways, so I would say going into tomorrow, unfortunately, I'm going to have to scale back share size. It's unfortunate because it might mean that I undercapitalize on some nice opportunities, potentially. But if we end up having another another choppy day, it'll help me minimize any additional drawdown. If I start to go red right away, I'm going to have to really quickly just ease off and say, nah, I better just, unwind this and let it go. And not try to, and it's easier to jump right out with smaller share size, certainly, than with big share size. So, we'll see. But I would say the market right now has been kind of, it was cold the last kind of 2 weeks, but then it was warmer on Thursday and Friday. Today is cold again. So it seems like we're starting to get into a little bit of a hot cold cycle where maybe one day will be hot and the next day is cold, one day's hot, next day is cold. And that can be a little tricky because you sort of come in each day. Is this going to be a day where nothing is happening like today, or is this going to be a good day? So we'll see. But anyways, that's it for me. Kind of a long recap, but I think it's good to break down the red day recaps maybe with more detail than the green days, because these are the days, certainly for me, that are a little bit more challenging. But also probably more challenging for for any trader. So just again, those of you who are just getting started, I hope you don't get too discouraged seeing a couple choppy days or weeks in the market. It's ebb and flow. This is the way it has always been. It's the way it'll always be. So take the winners when they come. Try to ease off the throttle when it feels choppy. Study, and just also remember that we all make mistakes, and we all will be able to have opportunities to look back and say, I would have done this differently. I wish I hadn't traded this day. But that's part of trading. So you got to be able to forgive yourself, move forward, and get really good at pressing that reset button and kind of getting back on the horse. And starting to dig your way out of a hole, because probably half of your beginning trading career is going to be in that mentality of digging myself out of a hole. I had a red day, now I've got to get myself back to green without making it worse. So that's going to be an important skill for you guys to learn. So anyways, that's it for me. I'm going to shut it down. I don't even want to look at charts. I don't want to get FOMO and jump into Tesla at 405 or whatever. Nice break of 400, I guess. A little choppy initially, but it did get through. So I'll be back at it tomorrow. Hopefully we see some better opportunities on the gap scanner and maybe a better day tomorrow than today. I mean, I really hope tomorrow is better than today. I think it will be, as long as I can stick with the game plan of smaller share size. All right, so that's it for me. I'll see you guys first thing tomorrow morning.
Oh, hey, I didn't see you there. Help us hit 750,000 subscribers by hitting that subscribe button, and stay tuned and check out some of my other awesome uploads right here on YouTube.